Yo, 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 what's up? Is my audio good? Loud and clear. So far, so good. Nice, nice. Nice to see familiar faces in here. Um, how's the music volume? All good? Alright, perfect. Perfect. Oh, the music is like, it's transitioning to a new song right now. Thank you, Eric. That screensaver is like literally my room. It's just like some posters are not really matching up, but you know, it's pretty much my setup. What's up, Corey? What's up, Clement? Jake? Jason? What's up, Joe? Nico? Next level Discord waiting music. For real. Oh my goodness, that was loud. Yo, what is up, Doug? What is up, Daniel? I just refer to you as Snows, but I'm pretty sure your name's Daniel. From my memory. Yes, sir. So, you know, in yesterday's live, I was talking about how we could see some sort of manipulation on the highs and then trade lower. We got SMT divergence on this high, and then we ended up getting a silver bullet setup, trading lower. And once again, I'm still looking for lower prices in this whole thing because it looks like a market maker sell model to me. And I think it's like, I feel like it's pretty evident. So right now, this is just what we're paying attention to, what I'm paying attention to. In terms of trading, today wouldn't really necessarily be a day I would want to trade just because it's a day after a bank holiday. But once again, it looks like price is like trading quite well right now. It's where we're displacing past lows, and so we can refer to those gaps, right? This becomes a breakaway gap essentially. Or here you actually get an IOFED, so this gap should remain open, and then looking for lower prices from here. So you guys can pay attention to this one right here. What I'm paying attention to is this fair value gap right here. See if it wants to offer lower prices. Even look on the 15-minute chart if you want. And so from here, it looks like, actually it looks pretty nice. It looks like a accumulation phase right here. Get a manipulation higher, start trading lower, we get a market structure shift, and we could probably see some lower prices today, right into this objective right here. And then if we go even lower, we could probably reach for that -4 standard deviations and then create some sort of SMT divergence on the lows to take us higher, is what I'm expecting right now. Good morning, Altane. Altane? Big day could be XAMD. Alright, let me take a look. Yo, what's up, Doug? The daily profile. So once again, referring back to quarterly theory, we want to use that correct time frame alignment. Here's your daily quarters. So it in fact does look like XAMD as of right now. I don't go to school. I was originally in school for aviation, but I dropped out to just pursue full-time trading. So from right here, this area of interest is, look, we have a consolidation right here, manipulate in Q2, started trading lower, and so now we can look for potentially lower prices, which fits into that market maker sell model narrative on the 1 hour. So if you guys are trading today, I would say for now I'm bearish. If anything changes, then I'll be here until like 10:30 and I'll update you guys on that. um Once again, today not really a day I want to trade personally for my own trading plan, just because it's a day after a holiday, and to me that's just low probability, so I will not be trading. But for those that are trading today, I'll just give you my thoughts on the market, and that would be that I believe that we're going to be going lower. Yeah, I wanted to become a pilot, but I was also thinking about it in terms of like my future family and stuff like that, and it just wouldn't be ideal, because it's like if I wanted to start a family, I'd be away from home a lot. Whereas trading is like best of every world essentially. Like I gotta work from home, work my own hours. I mean, what did my parents think about you wanting to drop out? My mom was not happy about it, but my dad is like, he's a business owner himself, so he's very supportive of whatever business ventures I want to go into, which is I'm grateful for. Blessed to have that. Electrical engineer drop out here as well. Yeah, I mean, like, trading itself is a career, you know what I mean? And you can make really good money from trading. And now that I've found like consistency in my journey, I'm just trying to help other people achieve the same thing, because my end goal is essentially just help people that weren't as fortunate as myself. Because I know like there's a lot of people out there, like they want to pursue specific things, but maybe like financially or even time wise, like they can't, they're bound to something. So I'm just trying to like expedite their learning process, if that makes sense. Exactly, Joe. That's another really big thing with a lot of technology advancements. Like we can expect like a lot of jobs to be taken over, especially with like so much AI. I don't know if you guys saw, but there's this new AI video generating software where essentially you can just generate, I forgot what it was called. It starts with the S, but they've gotten like, yeah, Sora. So like from what I saw on their posts and stuff, like that is crazy stuff. So it's like, imagine people like photographer, videographers. Like imagine you could just AI generate something, and suddenly you don't need a photographer or a videographer. Even like I was looking into different backdrops for YouTube content, because I was gonna start using a um webcam, right? So I've been looking into that, and a lot of people were like, "Oh yeah, you can just use AI to generate your background." I'm like, that's crazy, because it looks so realistic, which is the crazy part. And they just add like a filter on top of it to make it so that there's still noise in terms of the video capture. Imagine flying. This is your captain speaking. It's time to long. Like what? Time to long Nasdaq right now. I am a gamer, or I used to be. I still game, to be honest. Yo, what's up, David? Nice to see you in here. Yeah, I was like D-Gen gamer. Yeah, if you long NQ right now, I don't know how I feel about that. Wait, but hear me out. If you guys all put your stop loss right here and I short, then I think the market just goes there, no? I think that's a great plan. Probably gonna wait for post 9:30 opening for an entry short. Yeah, 9:30 is always a good. You can also pay attention to is like, did we manipulate out sufficient liquidity? And usually, if you can identify that, then 9:30 or high impact news, they'll just accelerate towards where your target is rather than cause a Judas swing. Caps lock. My camera comes in today though, so super excited to I mean, it's like if I turn on webcam, you just stare at me staring at my screen, so there's really not much, but you know, it'd be interesting. Yeah, I'm gonna have webcam streams, and then um for my content like lectures that I'm posting soon, I'm also gonna have my face in those. I'm thinking I'm just gonna do it the way Jesse does it. He has like a backdrop and then um add some lights. Because at the end of the day, it's just my face in the corner of the screen. I don't think my background matters too much. Seeing your turtleneck? Yeah, I can. Oh, Jesse is a Casper. Yeah, Casper SMC. Yeah, for my first webcam stream, I'll wear the turtleneck. I got you guys. First quarter of New York session was X, so 9 to 10:30 should manipulate higher. No. So right now what I'm looking at is that there was a consolidation like right here. This is what I'm paying attention to. We manipulated and we start displacing lower. So right now I'm just waiting for a reaction from this point right here. If I was to be in a short right now, not something I want to see in price like this. I'd want displacement past lows. And once again, if we're paying attention to immediate order flow, what is it telling us? It's telling us right here that this is being respected. So I'm watching this and watching this area. So both of these areas, we're just kind of chopping around in it. So I'm just waiting for that. Yes, me too, Elijah. I want that shit to just plummet. I'm ready. But usually when we want something, the opposite happens, so. In the meantime, everyone pull out your Clash of Clans. I'm gonna get to work. I like that too, Joe. Yeah, I feel like once again trading's pretty boring. It's like we've already ironed out the higher time frame narrative. It's like market maker sell model is what I'm looking at right now. Fair value gap, we're trading back into it. There's an order block right here. If we get further push lower, then I'd expect lower prices. Yeah, that's take a look at DXY. What is it doing? Reaching for these lows as anticipated. Actually, I'm looking at this low over here. Once we take that, we could possibly see some sort of reaction to go higher. Because on the higher time frame, once again, still bullish as of right now. Take lows, displace higher, that would be ideal. If not, if we start displacing below this low with a fair value gap, then if we displace past this low with a fair value gap, then I would be bearish. Yo, my throat is really dry. It's been very dry recently. I think it's because I'm constantly talking. Yes, Clash of Clans. Gotta max out my base, you know? And so when we expect DXY to be bearish right now, we can expect NQ or index futures really just be like choppier, if that makes sense. But, or choppier if it's trying to go higher, that is. Another thing that I'm paying attention is that this low over here is the SMT low, and we took it out, and we have SMT again right here. So something you guys can also look out for. But in terms of higher time frame narrative, I'm expecting lower prices. We're also inside that 4-hour order block. So referring back to our 15-minute chart, we can expect lower prices. Right now we're kind of just consolidating though, so I'm still waiting. Yes, Joe. Time, then price. I'm gonna delete these lines. Now let's refer to the sessions quarters. Where is our 730 open at? Oh, that's perfect actually. Yeah, I watched Day's podcast. That was insane. So now we can expect some sort of manipulation, right? Because we have X, A, M, and D distribution between 10:30 and 12. We can expect that according to quarterly theory inside of this session. His backstory is crazy. And, like, kudos to him for like being able to make it out of that. That's crazy. Not only did he make it out of that, but he like engineered something, like reverse engineered ICT's work into something that is extremely precise. Welcome everybody to the stream if you're new here, and thank you for going by. Because I see there's 72 of you guys here, which is awesome. Feel free to ask questions while we're waiting, because it's a great use of time. I'm gonna go get some water and I'll be right back, and then if I'll start reading through all the questions you guys have and I'll just start answering them. All right, so DXY has taken the low that we were expecting, so now see what kind of reaction we get from it. It is a 4-hour low, so just keep that in mind, and we're looking at the 5-minute chart. That DXY previous day low was taken, we would look for it to reverse to internal range liquidity. You could, but I would wait for SMT divergence first before confirming that. Daniel, what is good? Good morning. Nice to see you in here. For those that are in the Discord, I think I've made the decision that instead of only having Q&A every Monday, I'm going to do a lecture inside. So every Monday at 12 p.m. instead of just Q&A, I'm going to do a lecture. And then that way we'll have a focused topic that we can build upon. And then afterwards we can do Q&A. And then I'll just answer your questions. So that's the planning right now. That way you guys get some sort of new insight into the market from my experience every week, and I can like organize it into presentations for you guys. Looking good, right? So far as like DXY taps this low, and then we see acceleration in NQ, ES, and YM starting to push a little lower, which is a good sign because it's our expected outcome, right? From this low, we have a liquidity run on DXY, then we're expecting lower prices on index futures because they're inversely correlated. The daily's XAMD and today's session breakdown is also XAMD. I want to say that the daily actually looks more like accumulation, manipulation, distribution kind of thing right now. So we can expect that we're distributing in Q3 of the daily cycle. And right now, in terms of the session cycle, it does look like we are also in that distribution phase right now because we had a manipulation right here above these highs. Once again, I don't look at quarterly theory like a hard line in the sand. It's like framework, right? Right, and you can also look here, we have SMT on the highs. Right here, so far with NQ, we have SMT at these highs right here. Right, within a hourly fair value gap. And that's above the 730 open as well, right? So it's all of those confluences coming together. So that's making me lean bearish as of right now. And so I would like to see displacement past this low if we were to go lower. So preferably create some sort of fair value gap through this low. And so in turn, that would activate this breaker right here, right? This breaker, once we close below it, it's activated. We can anticipate that this gap right here becomes a breakaway gap. If ERL to IRL is not represented in weekly or daily, is it okay to use it 4 hour 1 hour? Yes, the time is fractal, so you can use it on any time frame. It works the exact same. Looking good so far. 2 more minutes. Anything can happen. Right, but if we're paying attention, once again, you can look here, right? We trade external range liquidity. You can look at that on the 4 hours. And so here we have internal range liquidity. And we displace lower again into what? External range liquidity. Once we take that, what happens? We trade back into internal range liquidity. So what's my expectations right now? External range liquidity, which would be that market maker sell model complete. Make sense? And so now we have equities open in about a minute. From this equities open, I'm anticipating a run lower, right? That's just my expectations. Possibly, like right here, you see Dow Jones, we're taking this high. We have SMT divergence again. So we'll see what this has to offer. Once again, not really what I want to see in terms of displacement. So we manipulate this low. As of right now, I don't really have much of a reason to go higher. So expecting lower today, not seek and destroy after yesterday's bank holiday. Yeah, we can also expect that. So that's why I'm not trading today. I'm just kind of tape reading for those that want to trade. I don't suggest trading, but once again, if it's part of your plan, then just follow your plan, right? Right now, I really like this reaction from YM. It's looking very solid. So now it's 9:30, equities open. Let's see what happens. So now we see ES is starting to run a little higher, or trying to. What is the best way to learn to trade indices coming from Forex? I'm not sure actually, because I never traded Forex. That's a thing. But I think like when it comes to analysis, it's essentially the same thing, right? And if you're swapping over from Forex, then you just have to understand like different times. So like in Forex, you'll generally see 8:30, like between 8 to 9, you'll see that volatility spike. Whereas on indices, you're waiting for that 9:30 equities open, which is when the New York Stock Exchange opens. But then you'll see volatility at 9:30 as well. Starting to push higher. I think this high is an obvious target. That's too obvious. I probably should not call that. Once again, stick to your higher time frame narrative. So my higher time frame narrative is still telling me we're bearish as of right now. So I'm just going to stick to that. And so whenever we trade above highs, I'm looking at that as like a turtle soup essentially. And what would confirm that for me is essentially SMT divergence, right? So if NQ runs above this high right here, then I'm watching ES and YM. Did we also run those highs out? And right now YM is taking out that high. NQ, ES have not taken that high yet. So we can just wait for that confirmation. So I'm looking at this move right now as manipulation, essentially. Okay, like where to learn how contract works, etc. So I don't know actually. I will be like releasing videos on that. It's like very, very basic stuff I'm releasing videos on. It's just like I'm gonna be releasing the 2024 mentorship series, and essentially it's just covering everything from A to Z, what I look at, and if I was a beginner, what I would want to learn and stuff like that. Honestly, here's a tip for any market you trade. It's just you use the short and long tool, and you can just base your risk off of this. And so you can calculate whatever you want. So let's say I want to risk like $5,000, okay, per trade. Then I want to put my stop loss at this high, enter here, for example. And so right here, it tells me 5.348 contracts, and I just round it to the nearest number that allows for my risk. So I would just put 5 contracts on this trade, if that makes sense. So far, so good. I don't see anything invalidating my analysis as of right now. I still look at this as manipulation right now. So um, if I was trading, actually no, I'm not gonna teach you guys that. I want to teach you guys bad habits. Yes. So watching YM, I'm watching it as confluence for an SMT, which would be that, manipulation, right? At the beginning and end of every trend, there will be an SMT. You just know the indices want to fall right now, whereas DXY is kind of just holding it there. But the second DXY is willing to run higher, I believe that the index are just going to drop. All right, so you can see the SMT on this high, right? With the YM. I'll delete these lines for you guys. Make my chart a little cleaner. Yes, I stream every Tuesday. And thank you for the kind words. I appreciate that. Here we go. Here we go. Don't get the FOMO. If you miss the move, you miss the move. It just is what it is. Today's not part of my plan to trade, so I'm just tape reading. Right? So even if it goes, even if I'm right, it doesn't matter. The highs aren't exactly at the same time. Does that matter? Not necessarily. You just want to see SMT divergence. So far, so good though, in terms of my analysis, right? If we're gonna continue lower, then you would expect displacement past previous lows, which we are getting right now. And so if you were in a trade, I would have taken profit at that low for low hanging fruit, because it's also that negative 3.5 standard deviations we've already tapped into. So once again, you can pay attention to these as like invisible PD arrays, right? So here, -2, -2.5, we get that retracement as expected. Then -3, -4. You can expect that next invisible PD array essentially. Telling you, markets are rigged. Markets are rigged. Once you understand your underlying higher time frame narrative, and then you incorporate some sort of algorithmic theory into it, markets are rigged. Yeah, very possible here actually, Elijah. Oh, this is such a clean market maker sell model. That's crazy. And last week on Friday, I was live streaming. I was saying that this is the dealing range that we're looking at, since we got such a massive displacement lower from Friday. So we displaced lower. This low is what confirms my buy shift, because it's that first internal range low. And so once we took that, I took a long from here up to this consequent encroachment, and then from here we start seeing lower prices. Looks good. Looks very good actually. I like that. It's always fascinating to watch these play out, because when you're on the right side of the curve, trading is easy. It's like throughout all of this, if you just shorted, like you just make money. Throughout all of this, you're on the buy side of the curve, you just buy, you make money. Throughout all of this, you sell side of the curve, right? It's like it's just never ending. Like, let me just annotate this for you guys. It's really this easy. It's really as easy as identifying when is the curve shifting, right? Oh, okay, buy side of the curve. Oh, sell side of the curve. Oh, what's up here? Oh, we have side of the curve, sell side of the curve. Well, what's over here? Oh, we have, well, once again, sell side of the curve, buy side of the curve. Just, it's over and over again. It's really the same thing. You're just riding the wave. You know what I'm saying? Like, once you understand market maker models, it's easy. And that's why I'm like gonna teach, like, my mentorship is gonna be, I feel like it's gonna be like way better than a lot of things out there, because I am structuring it in a way where I teach you to spot specific things, whereas in other courses or lectures or whatever, you'll find is like they teach you it last, and that's simply market maker models. Like, if I were to give you guys a homework assignment right now, just go into the market and spot curves. So you have a curve at the highs here, you have a curve at the lows here, you have a curve at the highs here. Just spot these curves. That's all you're training your eye to do. Spot these curves, right? All you're doing. And then when you find these correct spots in the market that the market is reversing, then your projections become extremely accurate, because it's algorithmic. In my eyes, this is a market maker sell model complete already, just because we're inside this zone already. But if we're going for liquidity, then this low right here is that final objective. When does the mentorship start? Honestly, I have no clue. I think I'm still like trying to iron out a way to release each lecture so that it builds on top of each other very well. But sometimes you'll realize that, like, what I've learned is that you can't have one without the other, and it's very difficult to teach it that way because at the end of the day, ICT is time and price, right? So if I teach the time element, I think that that's what I'm going to focus on first, is teaching time elements, because you're it's better to know when to look for something rather than just knowing that something is there. You know what I mean? That makes sense. It's like if I see a market maker model forming anywhere, like it's better to know when it's happening versus just seeing the pattern, right? We don't want to be pattern traders. And so that element of time is what makes my trading model so high probability, is what makes my discretionary feel so high probability, is because of time, not price. But yes, price is very important as well. I'm not saying it's like obviously it's without price like you have nothing, but time and price, that's why both of them together is so important. So we still have 12 minutes until this hourly close. We'll just be waiting for that. Would you consider the lows of NQYM a bullish SMT? As of right now, I'm not considering it a bullish SMT yet, but it is something I have in the back of my mind. It's just I want this -4 standard deviations to be met, because usually -4 standard deviations is where you'll find your turtle soup. And essentially what turtle soup is I'll just tell you guys, it's SMT. That's, from my experience, SMT is just that is the turtle soup. That's what it is. So that objective on DXY, as annotated throughout the week, has been met, and now I'm expecting some sort of higher price on DXY, which means DXY is finally going to let the index futures drop. It's like, it's also whenever you see high resistance liquidity runs, you can tell it's like over time with enough screen time, you'll feel like, oh, this doesn't look like it wants to go that direction. You know what I mean? It's like if I'm watching a market and NQ is like climbing like this, I'll just be like, yeah, there's no way that it wants to keep going up. Like, so it generates all this liquidity and then it just plummets. And this low resistance liquidity run is what you want to trade. And oftentimes you'll see that this happens because, one, high resistance liquidity, from my experience, once again, is because DXY is moving in the opposing direction, right? So it's like if DXY, let's say index futures, like today, it's bearish, okay? And DXY is also bearish. So it's gonna make the index futures go higher. But the index futures don't want to go higher. So they'll just have that high resistance liquidity run. And then at the moment they get, once DXY gives that, like, kind of like just lets go of index futures. I don't know how to explain it, but if you guys visualize, just like imagine DXY just has its hands around Nasdaq's neck, okay? Like they're just strangling it, and so it's like pushing it up, pushing it higher, and finally, when DXY lets go, then DXY can breathe. I mean, NQ can breathe essentially and expand in the true direction it wants to go. And so here we'll see that on the 5-minute chart. I'll show you guys. Right? It's like you can tell here that NQ doesn't want to go higher. It's like just high resistance, right? It's very slow, not a trade you want to be in. And so once we trade above these highs, DXY finally trades below this low, which means DXY can finally trade higher, which also means NQ can trade lower. So this is the trade you want to be in, right? This quick displacement lower. So I hope that made sense. I'm just kind of trying to explain what I visualize in my head, because it's just like from screen time, you like kind of build these little narratives in your head. Looking good right now. This right here, breakaway gap. Okay, this is a gap we don't want to see tap back into. It's reaching for target, but where was the entry? It went too fast. My entry would have been the turtle soup right here. This is my entry right here. Boom. So just like that. So I hope this stream has been insightful. I'm just like tape reading for you guys. But this is where I would look to enter, because remember in the stream at 9:30 we're expecting that Judo swing to manipulate highs. So I saw why I'm running higher, NQ failing to make that higher high, ES failing to make that higher high. Okay. So from this turtle soup, what I like to do to confirm it is, one, we already have that SMT divergence. It's very obvious. NQ is running so much higher than NQ. YM is running so much higher than NQ. So it's very obvious SMT is going to be there. And then from here, and this is what I was saying I didn't want to teach you guys earlier, but what I would do is from this high right here, go down to the 15-second and look for my entry. So what is my entry pattern? Balance price range, inversion, fair value gap, market structure shift. So if we see this right here, this inversion fair value gap, this is a market structure shift, and we also have a balanced price range right here. That's all three actually. So you can enter at 3 points, but if you were to enter right here, right, what does that look like on the 5-minute? It looks like a turtle soup entry, right? But in reality, I really dropped down to a lower time frame because price is fractal before that turtle soup. Right? And so from this point on, I'd just be managing my trade on the 15-second chart. Right? And did we ever go into drawdown? No, we didn't. Actually, we did by like a few points, but that's like basically nothing. You know what I mean? It's like you manage your trade. This is perfect. This is actually perfection right here. Actually, I don't want to say this is perfection, because there's like, I am still like growing and I don't plan to stop learning anytime soon. So for those that are wondering, I stream publicly on YouTube once a week on Tuesdays, and then Monday, Wednesday, or Thursday, and then Friday I stream inside the Discord. So you guys can feel free to join the Discord if you want. There's a free Discord, and then there's also a premium Discord. So if you join the Discord, I think you'll just get a lot of benefits there. Yeah. Thank you, Rob. Appreciate that. could you potentially add the 15-second to the daily H1? Yes, exactly. So that's exactly what I do. So how I get such a high probability analysis is actually I teach people to do 3 time frame alignments because that's what I did to become consistent with the unicorn model, which was just daily, hourly, 5-minute. That's all I did. Okay. And so over time, as I was developing, I ended up using monthly, daily, hourly, 5-minute, 15-second. Or I would go from weekly, 4-hour, 15-minute, 1-minute, 5-second. So those were the time frame alignments I would use. And that's why you'll see me like scalp enter with swing trades and, well, not swing trades, more like catching the daily range essentially. So it's like if I enter on the 15-second, I'm really targeting a 1-hour target. If I enter on the 5-second, I'm really targeting a 4-hour target. And once again, it's just price is fractal. You have to apply the same thing. And whenever all those time frames align, it's just, that's a plus 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 setup. I'm gonna take it every time. And you'll just see like I catch like a 10-hour trade, and that's how. You see DXY tapped into a bearish monthly fair value gap. Cause daily market maker sell model. Yes, that can cause that. So I'm aware of that as well. So on DXY, we could be looking at that, but as of right now, right? So we have that monthly fair value gap, and then we could potentially see lower prices all the way down to this low right here. We can draw a projection swing right here. A projection swing right here, so we can target this low, this here. But in order to initiate this bias, once again, I'm paying attention to this range right here. And if we're bearish, we need to see displacement past lows, right? What do you think is happening on the daily for indices right now? I personally am confused right now. Yeah, I'll go over that. So anyways, this is my analysis for DXY, but ultimately it's like if we are continuing bullish, then this high is the target, right? So we just have to pay attention to order flow. What is it presenting to us right now? Let's go back to daily chart for index futures. I think this chart is a little clearer. All right, let me just clean this up. This is bothering me. Okay, so here we have NASDAQ, ESYM, right? Go to the daily chart. I think we're going lower because we're kind of reaching the end of that IPTA data range projection forward. And so we can look at this high as an SMT divergence. IPTA 20. I would not be surprised if index futures are reaching for this low right now. This low here. Or you could, well, this low right here has been taken. It's like an SMT divergence of the lows. So you could also look at this. So these are like my daily targets as of right now to go lower. Then we can even look further back. It's like, what's our IPTA 40? 40 bars. That would be all the way down here. So long-term projections is what I'm looking at right now in terms of the daily chart. But once again, until we get that, all the markets have to be in sync with each other in order for that to play out. So as of right now, you can already tell like they're not in sync. NASDAQ's about to take this low, which is that market maker sell model we're looking at. And then ES is not even close to that low. YM is trading higher from this BPR. So the markets are out of sync, not something that we want to bet on as of right now. So we pay attention to our intraday levels since we're day traders anyways, and just pay attention to our intraday levels. Five second or 5 minute? What do you mean? Like the time frame I execute on, I execute on the 5 seconds sometimes. I think honestly my favorite time frames to execute on is like the 5 second and the 15 second. But when I teach people the 5 minute, because it's just, I think the 5 seconds is extremely confusing for a lot of people. And it's definitely a skill you can acquire. It's just, it takes time. Uh, 5 second to 4 hour. Oh yeah, I was saying 5 second entry and then targeting a 4 hour target. But that's like if all of your time frames are in alignment, then that would be ideal. If not, then you would just be essentially scalping. So there you go. That's the target. That's the final objective for me for the day. As of right now, it's time to just wait. So Daniel, your question, would you be leaning more bullish now since we took that liquidity and reached the 4 standard deviations? Answer to that is we wait. I said you don't really want to go lower than the 15-minute on Forex, but what do you think about the 5-minute for Forex, or is that too low? Once again, I think anything is tradable. Comes down to your trading plan. It's just for Forex, I find it to be a little less clean and sometimes it can be choppier. So that's why I stick to 15-minute. So if I were to trade the Forex market, personally, I would use the daily cycle in relation to 15-minute price action. And then look for a 4-hour higher time frame PD array and then trade based off of that. Yep. So this low is a very big SMT, and we're once again we just have to wait. We just have to wait now for what price gives us. Can you go over how you enter the second distribution or accumulation leg in a market maker model? Yes. So that would be the silver bullet setup that I annotated up here. So you generally want to see symmetry in the markets, right? So we took out, let me mark out these phases actually. I think it would make it a little easier. Actually, I'm going to screenshot this. Oh no, what did I just do? I use the daily 4-hour and 15-minute. Yeah, so it's always paying attention to time frame alignment. So there's different like time frame. Okay, so what Day calls it is time frame synchronization with time. And then you have time frame alignment for price. Does that make sense? It's a little confusing, but once you grasp it, it makes a lot of sense. Are you looking for entries on NAS? No, I'm not. I'm finished for today. Final objective has been hit, and I'm just gonna wait now to see what the market has to offer. And once again, guys, it's a game of patience. It's like in my trading plan, it's not my plan to trade today, so I'm not going to trade today. I don't care if I missed out on profits. Like my setup, I was annotating it live and it played out, but it is what it is. You know what I mean? It's not part of my trading plan. I'm not going to trade. Consistency over home runs. Oh yeah, right. The silver bullet. Sorry. Gonna annotate this for you. So if you're trading the second distribution of a market maker model, you generally want to look for symmetry in the markets. So we have our accumulation. This is reaccumulation right here. Another accumulation right there. And this would be your smart money reversal over here, right? Or you can say this original consolidation. Just make it a little more obvious for you guys. What just happened? Okay. Original consolidation here, right? And so you want to see symmetry. We see our smart money reversal here because we have SMT divergence on the highs. And mark this as smart money reversal. And so from here, what am I looking for? Once again, this is why I drew my dealing range from this high to this low. And I'm looking for that initial push in price, that initial run in price to push past the 50% level of this dealing range. Okay. So from here, once we got that, that's why I was annotating this low specifically, because this low is in discount. And so once we push past that, I can now anticipate within the -2, -2.5 standard deviations, we get a retracement. And so I'm paying attention to the midpoint of this gap. Okay. And that's why I said on Friday, for those that were in the stream, that I want to pay attention to the midpoints of these gaps and see how we react. Well, how did we react? We got SMT on the highs here and we pushed lower. And that's very telling because displacement is always telling. And so here, what do we get? SMT divergence within PD array. Right? You see that? That is SMT divergence. Above that high, that is your silver bullet. And so once this SMT occurs, all the way down, you're looking for sells. This is where you want to find your entry. That's the silver bullet. Right here. This area right here. Once this high is taken, this is where you're looking for your setup. This is where you find that silver bullet setup. Let me drop down to 5 minute, right? So we get our market structure shift right here. That's our market structure shift. It's very tiny right there. Market structure shift. So we're looking for fair value gaps now. And so we don't have any fair value gaps until here. So we create this fair value gap and we can look at this as our silver bullet entry. And what do you know? It occurs between 10 and 11. Isn't that crazy? Isn't that crazy? And that's what silver bullet really is. It's a second stage distribution or accumulation. And so from here you can look for that entry, enter on this fair value gap, stops above this high, right? In ICT's criteria, he says at least 10 points. So if you entered on this trade right here, you would need at least 10 points, which you have more than 10 points actually. Actually, this right here would have been like your trade would have been done before this whole move even happened. Actually, 10 to 11 is your quote unquote silver bullet window. You get this fair value gap right here. So let's say you entered on it, and then you're just looking for 10 points, right? So 10 points would be right here. Okay. stop loss above this candle or the creation, or you can even the swing high if you want to go for a bigger trade. And right there, that's your silver bullet. Super easy, super clean, right? But it's in context of a higher time frame, and that's the most important thing, is that you can have any entry model ever to exist. Without higher time frame context, it's not going to work. Or maybe sometimes it works, but it's because it's in context of higher time frame narrative. So the number one skills you guys should be focusing on is not a strategy, not a entry model. What's the best entry model? What's the best mechanical model? It's not that. What you should be building up right now is your skill to read the higher time frame narrative, the skill to develop that narrative, right? So once we took this low, what do we expect? We expect distribution, because we're looking for symmetry in the market, right? So once we took this low, we can expect distribution phase here, right? This one's actually prolonged. And so once we take this low, right, this is that accumulation phase low. Okay, so what can we expect after that? Redistribution, right? Symmetry in the markets. That's what we want to see. Have that redistribution. And then after that, have that final push lower into original consolidation. So right here, silver bullets. Here you could call this a silver bullet. Here you could call this a silver bullet. All of these are silver bullets, as long as you use it in context of the higher time frame. Right? Does that make it clear? Ethan, what do you think DXY? Do you think DXY has a market maker sell model? I just covered this in the live stream, so if you scrub back, you can take a look at it. But essentially, like a very quick rundown is that on the daily, like we are inside a monthly fair value gap right now. So if we see that we get displacement lower, then we can possibly be seeing a market maker sell model like this, something like that. But until then, I'm bullish right now. So. But yeah, this annotate, now that I annotated it, it becomes a lot clearer, right? No worries, Evil. Is this idea the same as price moving from ERL to IRL? Exact same thing. So essentially what ERL and IRL are basically framing for you is that on the higher time frame, you're expecting internal to external range liquidity. But when you drop down to a lower time frame, you will see that, say this is internal range liquidity. Okay. We have external range liquidity up here, for example. Okay. So what you'll really find is that you're getting a market maker model into it. So let's say you have original consolidation. So you get that displacement, you're looking for that. IRL, and now you're looking for ERL, right? So from here, what you're really doing is you're just framing the market maker model. Right? Same thing. It's just you're looking at internal range liquidity to external range liquidity as your higher time frame draw, but when you drop down to a lower time frame, you'll find that market maker model. Right? That makes sense? You're good, Max. Market maker is literally the ticket of the market. Yes, it is. Market maker models, element of time, element of price, and then you have time. What are you expecting? Well, let's say you're splitting this up into quarters, right? Let's say this is your quarters. What do you have? time and price. Isn't it crazy? Accumulation, manipulation, distribution, continuation. Crazy, right? Yes, exactly, Max. I'm gonna delete this now. I hope that this made sense. Okay, so I'm gonna look. There's this annotation I made a while back, and I'll share it once again because this is like literally what we're doing here. This is literally what we're doing here. Trade a market maker model. I posted this on January 11th, I think. Yeah, January 11th. So you can see here that we have that origin consolidation, and this is a 5-second chart, I believe this was a 5-second chart. And so I was looking at this market maker model on the 5-second chart in context the higher time frame. And so we get origin consolidation, distribution, redistribution, smart money reversal, accumulation phase 1, reaccumulation, and finally that final target, right? And this is just a picture perfect trade, right? Like it doesn't get more perfect than this. And what time, exactly at what time did we reverse? 9 a.m. It's not random. Like I'm telling you, like I say it so many times, but it's not random. Like I don't care what anyone tells me, it's not random. You can't convince me otherwise because I've already convinced myself through proof that it works, that it's not random. Anyways, this is another like picture perfect example right here. So with that said, I'm probably gonna hop off here very soon. So if you guys have any final questions, ask them now, and then I'll answer them before I head out. And then I'll give you guys like 3 minutes to like type your questions. Actually, I'll give you guys 5 minutes because for those that might not be subscribed, then you have to wait 5 minutes to type. So I'll give you guys 5 minutes to type questions, and then if there's no questions, then I appreciate you guys for coming by. Oh, I changed it to 5 minute, Joe. I appreciate you guys for coming by though, for real. You know, it takes trust on your end to learn from me. You trust me to teach you guys. I'll see you guys. Those are you that are in Smart Trading Blueprint. I'll see you guys in there. Oh, one more question, bro. You know how we have FOMC usually in the afternoon? Yep. If you have FOMC, you can look for a trade in the afternoon session. Yeah, you could do that. Just wait for FOMC first, though. Got you, Max. No worries. For those that aren't in my Discord, feel free to join it. It's free. And then there's the free side and there's like a private community, but that's completely optional. I'll be live on YouTube every Tuesday. But if you join the Discord, definitely like there's a lot of, you can ask questions in there and stuff like that. Yeah, with that said, I think there's probably not going to be any more questions, so it hasn't been 5 minutes yet, so I'll wait like 2 more minutes and then it'll be 5 minutes. FOMC tomorrow? No, it's not. It's meeting minutes. So it's not FOMC statement. So FOMC statement is different. That's the real news event. But FOMC meeting minutes is not. Yeah. I took MXM Traders course. Where else would you recommend learning more about market maker models? Not to sound arrogant, but I feel like I specialize in market maker models, so you can learn from me. I don't know who else you would learn it from, to be honest, because I only learned it from market maker, MMXM Trader, and I also learned it. Now I'm learning time elements from day, and then just like mindset and concept. I learned it from Casper SMC. Yeah, I got you, Max. Those are in the works right now, but I have to teach you guys the basics before I can teach you guys the final thing, because trust me, I've tried and it's like I realized there is so much stuff that actually goes into it. Like I have to teach you guys about projections, different PD arrays, when to spot specific things, right? Once again, I'm trying to dissect it into elements where it's like time and price. And then from that I can dissect that into smaller segments, and from that I can dissect into smaller segments. Do you teach a full model to follow with your premium content? I know a lot of ICT, but my brain is fried trying to put my own model together. Yeah, so my premium is essentially I'm teaching them to follow exactly how I do things, because how I do things works, and I'm just gonna reteach that. So right now what we're focusing on is narrative building, higher time frame narrative building, and that's like the greatest skill to have first, because once you have a higher time frame narrative, you can trade anything on the lower time frame and understand, like, you'll probably be right, you know what I mean? So right now for premium content, I'm planning a weekly lecture and then a Q&A right after that lecture, so that we have a focused topic to focus on every week. So that's the planning right now. Yeah. Is time synchronization when you align in the quarters? Yes, so time synchronization is when you align time frames with quarters, like the cycles, and then time frame alignment is when you align price. And that's why it's time then price, because you have to align your cycles and then you can align price. That makes sense. It gets a lot more in depth than that, but I'll be teaching that in the future. Um yeah, definitely, like, I need to figure out a way. I think how I'm gonna do it is that because premium members do, like, they do support me through like paying, like they actually give me, like, there's a subscription fee, right? So how I'm gonna do it is I'm gonna give them that information 2 weeks in advance, and then on YouTube I'll release it 2 weeks afterwards, if that makes sense. And so that's my planning right now, just to make it a little more exclusive, and they also have access directly to me and stuff like that. So that way it's like best of both worlds. Like, people that can't necessarily afford a subscription, is like, it's optional because it's still going to be released for free. But then those that choose to support me for my content creation, then that way they get exclusivity. Max. So so you can look like AMDX XAMD. You know what I mean? So like those are just two profiles. So I would just wait for Q1 to provide that information. And that's how I used to do it. Now I have other ways of determining if Monday is going to be an X, like an expansion or accumulation. But don't want to get into that too much right now. So just pay attention to This is what I would do. Pay attention to Q1. What is Q1 doing? Is Q1 expanding or is it consolidating? Okay, well, if Q1 consolidates, we can expect for AMDX. If Q1 expands, then we can expect for XAMD. Yes, so you're looking to trade either the manipulation phase or the distribution phase. Either or. Because right now, like as of right now, I'm looking at today as manipulation lower, so we can then trade higher, right? So if we're looking at it in that sense, today we're trading the manipulation phase, which we went lower. Yeah, seriously, quarterly theory changed my trading. Like, I used to have like good analysis because of market maker models, but once I incorporate quarterly theory with market maker models, man, oh man. So the X in AMDX is consolidation. No, X can be continuation or reversal. A means accumulation, so that would be consolidation. All right, with that said, I appreciate all of you guys for coming through today, spending the last hour and a half with me. But I do have to get some other work done, so appreciate you guys once again. I'll see you guys next week on Tuesday, and for those that are in the Discord, I'll see you guys tomorrow and Thursday. Actually, yeah, I'll host 2 more streams. Yeah, I'll see you guys Wednesday, Thursday, Friday. I just realized. But yeah, everybody take care, and thanks for coming by. So if there's a decent expansion in Asia, I'll consider that X. Yes. So you just want to look if there's a great way to do it is actually comparing Q1 to Q2. Is like, did Q1 expand more than Q2? Then you can like refer to that.